let's jump into it. Oh, she's going to take off. All right. Glad to have you. Thanks for stopping by. Go manage the kids. They're down there with the Bearden High School band, the band we were able to sponsor this year. So they took them down there in a march, in a parade, and see Disney World, I guess. All right. Appreciation webinar. Let's go to the charts, shall we? Let's see if I can get this thing to pop over to charts. So I posted this one in Discord, and there were a few questions about what exactly was going on here. Let's talk about, this is the S&P 500, SPX. So right here, let's zoom up a little bit and try to get a feel for everything. So February 24th, we had this low right here. And then we rallied into March. And we kind of found this rocky top up here at the beginning of March. Seems like forever ago, but it was only March 3rd, just 12 days ago. And then we started down again. And we came down to this point right here and made a higher low than we had on February 24th. And now we've been kind of sideways. Now this rally we had off of that low on March 8th, just 7 days ago, we rallied up and we came up just shy of the 618 level. And then we retraced again. And we came up just shy of making a lower low. And that was just yesterday on March 14th. So we made a higher low just yesterday than we did back here on the 8th. And that was a higher low than we made back in February 24th. So now we've got a series of higher lows in place. Now, we didn't fully come up and test the 618, which would have, if we had bounced there, we probably would have made a lower low, but we didn't. So we've got this consolidation going right now. It's not a high degree confidence pattern by any stretch of the imagination. I'm not going to sit here and tell you I know exactly what this is going to do. So right now we have a series of lower highs, and we held this right here. We held this line at the close. We tried to push higher, but then we closed right back below it. So we held this white line of lower highs running from March 10th right on through today. So we have a series of lower highs. We have a series of higher lows. And what that does is squeezes the market into a corner. And when the market gets backed into a corner, it tends to pop out. Now, is it going to pop out up or is it going to pop out down? I'm not sure yet. The parameters that we're working within, we're looking for a run up here, back up to the 4,700 area, or we could see a lower low down here to the this is a 4,072, but I could see us all the way down to 4,026 on using a little bit different fib lines, but the ultimate, I guess, the ultimate target or ultimate bottom line, we're either going to pop out and get going up, or we could see this lower low. The risk to the downside is not very big. The potential to the upside is much bigger. So what I want to see is a breakout. And we got to break out all this junk. We got a long set of downtrends going here. We need to break out. This 144 EMA, ride along with us. Got to get above that. We got to get above these pivots over here. We missed this weekly pivot right there. We've got the monthly pivot hanging out up here for March. What's that price? It's 43.61. So the monthly pivot all the way up at 43.61. The weekly pivot we missed, 43.41. So there's going to be some resistance as we get to that 144 EMA and those 43.40 to 60 area. Now, once we get through there, it's looking pretty good. Like we could see a return to the high and potentially a new all-time high. Even in the face of all this crap news that we got going on, just turn it off and watch the charts. They'll tell you what we're going to do. Right now, we've been kind of in this consolidation pattern. Like I said, lower highs, higher lows. That's not a high confidence pattern. So I'm just kind of waiting. Now, if we get a breakout, I'm going to be pounding the table, beating the desk, What do I think the market's waiting on, though? Remember, FOMC announcement tomorrow. Jerome Powell. We're going to talk about whether we get a rate hike or not. Is he going to rate hike? I don't know. The market was pricing in a half a point raise. He was talking about he's not going to do that. He might do a quarter point. Thinks he's going to do a quarter point. Maybe in the face of all the craziness, he might say, nah, well, we're going to wait. And that could make the market pop. Or we could get a bigger rate cut than we thought we were going to get. He could go back to the half point and we could get the drop. So, what's going to happen? I don't know. He says quarter point. So we'll see what happens. If he sticks to what he says, we may just rally. It may just be a slow, run out of here. FOMC events tend to be volatile. So watch out at 2 p.m. tomorrow, 2 p.m. Eastern. That's when the announcement comes out. And then Jay Powell, our buddy Jerome Powell, should be speaking at 2:30, which can also be a volatile event. So that 2 to 3 o'clock, it's probably going to be a volatile time in the market. So just watch out. All right. Be ready for it. All right. I've duly warned you. Now let's pop over and look at Nasdaq. I see S&P 500 really is just consolidating this box right here. I talked about that on Ask the Pros last Friday. That we were just kind of consolidating a box. We're still in that box. Got to break out higher highs to get out of the box or lower lows down here. And here's this 40-23 area on this chart. So we can see a push down. That's where this first move down is equal to this second move down. Would be down here at this 100% extension around 40.23. All right, popping over to NASDAQ. We did get a lower low on NASDAQ yesterday. So NASDAQ can be all finished up with this move. It's potential to be done and we take off. SPX could just be, just a messed up pattern and it just didn't clean it up. So NASDAQ could be the one that's pointing the direction. Now we also have the Russell. It's made a series of, it made a higher low right here. It made a lower low than it made right here. So this one's kind of split the difference, right? It's it doesn't agree with either one of the other two. Doesn't agree with tech and it doesn't agree with the general SPX market, S&P 500 market. It's kind of its own, doing its own thing. Russell is the small caps, if you're unfamiliar. So it's an index of roughly 1,800. They say the 2,000, but roughly 1,800 small cap stocks. All right. A few weeks ago, we talked about gold. We got a fair pullback and drop, a dip and rip today. Let's talk about the fact that it's kind of an echo. Now, Echo Trades was my premier launched trade advisory service. And this is kind of an echo right here on a daily chart. We had this pullback back here in January. We just got this same size pullback. Today it dipped down, it dipped in the pre-market and then ripped after the market opened and closed back above. So really that kind of counts. The way I look at it, it kind of counts as holding the echo. Now, if we can start to see some positive action out of here, something bullish above these tails right here. Which tails? Let's zoom it up and talk about it. See these two candle highs right here? If we see a close in the next couple of days that gets above there, then that can be a bullish sign. Now, what kind of move out of here could we expect? Yeah, so we can find some resistance right up here, about 24.80. Getting above there, we could see a bust out to 27, 28, and get up into this 30 area, 31 area I was talking about before. This was a trade from a few weeks ago that I talked about and got, I talked about how I was getting into the $23 call, $23 call for January 2023, $23 call for 23. And I still have these lofty targets up here at 30. And breaking above 30 can see us move on up to 36 and 40. But right now, this 30 area is where I think we're headed. Now, NEM, and this is Barrick Mining, GOLD, it's not the metal. NEM Newmont Mining was also making a very nice looking echo pattern that we were talking about in echo trades today. So another one to watch out for. This one could break out also and start making a run for it. So if gold, the metal, quits doing a pullback and starts reversing back toward testing this all-time high, then I feel like these miners are probably going to take off. So they were both outperforming gold, the metal today. Now, big news, oil on, I think for a couple of weeks now during the webinar here, I've been calling for a move back into the 90s. We did test into this box today. I could see a push all the way down to the bottom of the box, the lower 90s. Now, if it doesn't hold this box, we're likely to return back down here to the 70s where we tested and consolidated earlier, or I guess later in the year last year, and had a little bit of trouble breaking out of as we came into 2022. Now, why do I think we're pulling back? Because this was a crazy exponential move up. And I just feel like this was the consolidation price. We're going to reconsolidate right there. If we can't hold it, we'll reconsolidate back down in this area where we kind of dipped in, came down, came back up, and we found resistance in that area, support in that area before too, 70 area. So we spent a lot of time last summer in the 70 area. Now that we've busted up to 10-year highs, then we're going to likely see a move back down. All righty. So that's oil. Now, the teaser we put out in the email, crypto, right? Usually I talk about Bitcoin and Ethereum. These are the two big dogs in the space. And their ratio has been drifting off a little bit lately. Bitcoin's been outperforming Ethereum. And during the Ask the Pros webinar last week, I mentioned that Ethereum's pattern looks a little more bearish, a little less bullish potential than Bitcoin's. But I have a different trade. I have found great strength in this coin right here. I actually put I swapped, I had about 31,000 CRO, roughly $12,000 worth. That's the crypto.com coin. I swapped them into Luna. I did that yesterday. So why do I think Luna has potential? Right here, it has this move up that has exceeded the 1618 extension of this first move up. So that's a very powerful move right there. And then it's consolidated again. So it's got a series of higher highs and higher lows, and it's made this trend. Let's see if I can find the trend channel trend thing I'm looking for. There we go. Got this trend line going here, or this channel. As long as we hang out in this channel, higher prices are in order. Now we did this nice big fat pullback over here that was very proportional and held the 1272, and then we made a higher low after hitting that. So those things combined together. I've had my eye on this one for a little while. I'd really like to see it break out higher. Consolidating right here below the prior all-time high is quite bullish for a push out to this 134 area. And we could see a move out to 183. So if it starts breaking out above the all-time high back here around 105, whatever the high was, 105.70, 106, we break out above that high, we could see a move up to 134, 183. So I've put a little bit of my money where my mouth is. I'm looking for that kind of move right there. So maintaining this bullish channel, it could take into next month to get there. So yeah, Luna's taking away. It probably is taking away market share from Ethereum. They use Anchor Protocol to verify their transactions, and through a proof of stake system that's actually working, as opposed to some of the other ones like Cardano that are having trouble getting the proof of stake working reliably. And so they've been having a lot of success, and a lot of people are moving over, especially with the there's potential European regulation coming out to limit proof of work coins and blah blah blah, yakety schmackety, whatever. Bottom line, the chart's quite bullish right now, and it looks like it's about to break out, get some new all-time highs. And the last time we had an all-time high was right around Christmas time. So looking for a new breakout to all-time highs after this consolidation that held key support. This was a key support holding, and it looks really ripe. So might be worth buying 1 or 2, 3. I don't know. I'm not saying load the boat. I certainly didn't load the boat. I just bought a little bit. So as opposed to, I took the money out of Crow. That's the crypto.com coin. It was breaking support, so I moved it over to one that was showing a bullish pattern, Luna. And this one's been making the top. If you look at coin market cap, it's been making the top list of gainers for a few weeks now. Obviously it's been somewhat of an uptrend since late February here. So, all right. I don't know. I'm not looking at the other. I went straight to Luna with my investment. So that's what I got for you this week. That's my pick on Luna. I don't dive into it too deep. I just mainly look at the price patterns. So, all right. Our other favorites we talk about, Mora. This one certainly not looking the most bullish right now with this series of lower highs. Today, I sold about 75 calls against shares I have at the 35 strike for April 1st. So I zoomed out here to April 1st, sold $35 strike calls against my shares. I got around 15 cents. I think that was probably the average fill for those calls. That gives me the obligation to sell 7,500 shares if Mora is above 35 on April 1st at the close. So right now, I kind of feel like this is a consolidation pattern, not unlike the S&P 500. That clicked wrong. Come down here. We've got a series kind of going of higher lows, and we've got these lower highs. So very similar to the S&P 500. S&P 500 sees a breakout. It's likely that Mora and Hut over here are all going to see this breakout. So this one a little more aggressively bearish than Mora is. And it's got a flatter bottom down here and a steeper down trend hanging out just to the bottom today. If this one can break out of this downtrend line, we can see some move back up to this prior high around 850 very quickly, and then possibly out to 10 or 12. So, all right. Don't think it'll get there. That's fine. You can. Opposing opinions are what makes a market. All right. And then we also have a favorite from a lot of people. Riot has the same sort of situation going on, where we've got these higher lows and these lower highs. We're coming down into a triangle. The bottom line, all these things, at some point, we're going to get to the end of the road. And just like I talked about on the S&P 500, when you squeeze the watermelon seed, it pops. You don't know where it's going to go, but this is like a watermelon seed, a pumpkin seed, and one of those slimy seeds. You're squeezing it between your fingers, and eventually it pops. And then which way it goes, we're not quite sure. It could go up, could go down. Time's going to tell here. All right. So the thing about it, they're all in different financial situations. Mora has already bought and paid for 199,000 mining machines. They have taken delivery on about 40,000 of said 199,000 mining machines. They're bought and paid for. So Yeah, experience squeezing the watermelon seeds. That's true. And planting them and growing them and everything. So, if I was putting my money in one, and I do have money in Mara, I do have money in Hut, I do have money in Riot, but I have the majority of my money, upwards of $250,000, in Mara, because I feel like they're best positioned to take advantage of future mining environment. They have deals in place for power. They've got deals in place for hosting, and I just feel like they're better set up. Hut is rather quiet about their mining operation. They mine a little bit of Ethereum. They mine a little bit of Bitcoin. They don't really tell a whole lot about their equipment and their hosting situation. So I think their chart kind of reflects their lack of transparency on their numbers. And Riot also, it's a little tough to find out their numbers too. So Mara is very transparent about how many Bitcoins they mine, where they're at, and all that sort of situation. You can pop over to Marathon Digital Holdings and you can read about their latest month and how they performed. And they'll tell you how many mining machines they've got online, how many they've had delivered, how many they're trying to get, deployed, and what they expect as they move toward their 199,000 mining machines deployed. I just feel like they communicate the best out of the three of them as far as what their intentions and plans are moving forward. All right. So we've talked about oil. We've talked about gold. We've talked a little bit about crypto. We've talked about the S&P 500. Talked about Nasdaq and the Russell. Time for a few requests. Take about 5 to 10 minutes of requests. What y'all got? Yeah, see, so news is not sentiment though. So to your question, Joey, say, it doesn't news influence the markets. Well, sentiment influences the market. And how do you determine sentiment? Well, price tells you what the sentiment is. So I read the price to figure out the sentiment, not the news, because news is mostly opinions. All right. Disney. Well, it's been coming on down. If it can't hold on to this 127 level, then I have a level down here at 114 that it may visit. So far it's been tracking ever since it broke out of the consolidation zone. It's been tracking right on down, right where I expected it to. The next levels to test are 126, 126, 127, and then down here at 114. Now, if it can start breaking back out of this funk, breaking back out of this downtrend, then we can see higher prices. But right now, Disney is tracking down. All right. Next up on the request, PepsiCo. I think it got a little overdone on the whole pulling out of Russia thing between both Pepsi and Coke. So we exceeded all downside expectations here. We kind of got back to where we were testing this consolidation zone over here. We've popped right back out at the end of the day. If that's all there is to it, then this could get bullish and take off again. Excuse me. The next resistance I would expect would be back up in this area. That's a large range. It actually looks probably more like this is where I expect some resistance, because we had this kind of crunchy consolidation down in here. So if we find some resistance in that area, it may bounce back in this range and go sideways for a little while. I do feel like it kind of got overdone for both Coke and Pepsi, but time's going to tell what the ultimate decision for the market is. That doesn't look like anything I'm willing to jump in on. I'm not a knife catcher. I'm not a bottom. Usually not just a buy on the bottom. I wait for the trend to show up. All right, Apple got a little deeper. We tried to retest the bottom and made a lower low. So this is in line with the Nasdaq making a lower low. we did hold this 149.50 area so far, and we're coming right back up. So far so good on this potentially being the lowest that we see for Apple right now. It's could have easily finished up this move, this correction. Like I said, it's in line with the Nasdaq, and time's going to tell if we get this out. Really, what we need to see now is some sort of move back up, a consolidation, and then a break back through the high. Continuation, new trend, pullback, continuation. That's what we need to see for Apple to reverse its downtrend. Right now we're in a pretty good downtrend. It's kind of accelerated here. So that's what I see on Apple. All right, Crocs, CROX. That's a downtrend. Where's the bottom? I don't know. Let's see. Now we could easily see a retrace back down in the 20s. That sucker went a long way up there. Got a long way it could head back down. All right, QCOM. Well, try the box over here. And just returned back to the box. Broke out, and it's got a gap to fill. It looks like it may have filled it pretty close today. Not exactly, didn't quite get there. I expect it to at least probably fill that gap before it can find support and get out of here. That'd be my guess. This big gap it made right here. Come on, come on, come on. I expect it to finish filling that gap. All right. AAL. That looks like a downtrend to me. Trend of lower highs. Let's turn on, let's see. Oh, that turned off there. Yeah, so we got a trend of lower highs going. Daily 144 EMA. We bounced off of it several times here. Held it here. Held it right here. We're gonna have to come up, break through that trend line, test that 144 EMA to get any kind of upside started on AAL. All right, Rio. Again, that looks pretty bad. In the big picture, you got downtrend going, and then it's dropping off a cliff right here too. This could be a wave, a B wave. We could be heading down to this 52 area here. All right. VIX. Yeah, so volatility, that's the name of the game. We didn't quite get a retrace back to this resting zone before we popped again. So right now it looks like we could roll off. We've kind of held the prior high from January. Even the February lower low did not pop a higher high on VIX. I think the trend right now is that we'll see this drift on back down. At least this point where the 144 EMA comes up right here. Probably see a test there. It may bounce again before it can drop on through. If the market breaks out higher, we'll see VIX retrace. If the market drops down to a new low, we may retrace these prior highs in this vicinity right here. And get back up and test that box one more time. Maybe poke a final higher high. We'll have to see. All right. UVXY is not really a great chart. that held the 144 EMA on the daily. So expect it to push down. It's really what I would expect. Just looking at that chart, because that's a 3-wave retrace right up into the 144 EMA, lower low. Now UVXY is a decaying asset, so lower low is a safe bet on the long term. All right. Right now I did cover calls on Mara, but I'm more than 2 standard deviations up for 17 days. So XLF. And most of these XL charts look pretty horrible here. Let's see what the financials have. Remove these prior lines. So we've got an A wave down, a B wave up, and a C wave down that held the 140 or held the 1272, excuse me. And it's almost got a 513 cross up with a move up and a pullback. Yeah, this is when I was talking about Apple earlier. We had a move up here, we had a pullback here, and we've got this little move breaking higher here and breaking above the 144 EMA right there around 38. Could set this thing up for a new trend. Little mini pattern right there. Better, it's easier to see it on the lower time frame here. We had this move up, a retrace down. And then we've had this, it's kind of a rocky start where we found resistance at this 144 EMA on the 30. But today, at the end of the day here, we're closing above. So if we can get that continued closing above, get above the daily 144 EMA out here to the 3850 area, this one could turn around. All right. Well, I talked about gold already. Silver is a whole different ball game. Silver is holding this 618 and likely to retrace back down to the lows. I don't think gold's set up on the same path. And that's where we are with silver right there. It bounced off the 618 and it's likely headed to a lower low. All right, ABBV looks like it's at all-time high. Breaking out there. Not much to say. It's pushed above it, all the targets here. Might look for a place to book and or protect profits. All right, NVIDIA. Take a couple more and then give y'all a quick little pitch and then we'll wrap it up since we're at 33 minutes. All right. NVIDIA down below the 144 EMA on the daily. Lower prices is what I got to expect from that right now. It's just consolidating right below the 144 EMA. It's got to get back up here. Got to move back up out of there, even start looking good. And probably I would want to see a move up through these prior highs right there from February. All right. I know lots more stuff you all wanted to see. Unfortunately, that's going to wrap it up for tonight. I've got a little thing to show y'all. So people ask me if it's really possible to grow a small account with trading. The next question is always, how big of an account do I need? My guess, every trader out here wants to know how to grow the smallest possible account in the quickest way possible, right? And that's a perfectly normal desire because, I mean, money doesn't grow on trees. We don't just find it laying in the street usually. So not everybody has thousands of dollars. They can just start out as a trader and, risk it all. And the market tends to reward those who do have a lot to invest, though, more quickly than those who just have a little bit. So I've been searching for a solution for these small account problems for ages. We did a whole series back in the fall, a small account challenge. I don't even have the envelope here anymore. We took my tax bill for the city of Knoxville and took that money and tried to beat the discount they were going to give me for paying early. And we did it pretty handily. I don't know that we ever put the final video, but I paid the taxes. We came out ahead, and I tried to come up with a way that I can teach other people how to do this small account thing. I wanted to hone it in. I was kind of all over the place a little bit with the different trades, and I wanted to find a system They could grow an even smaller account though. I mean, that was a $998 account, but I wanted to start out smaller, like as small as $100. How can we grow a $100 account? And it's going to take a little more patience, a little more discipline, and a little bit more, more focus on how to do that. So I came up with what I call the double dip trade. I'm talking about, for the double dip, I'm talking about dividends, and these aren't just your grandpa's dividends or some, dividend stocks like Apple. No, we're not looking at Apple. These are the highest yield dividends on the market. And I searched high and low to build a watch list of over 130 of these and put it into the double dip trades. And we're not going to wait around for the checks just to come in. We're not buying them all. What we're going to do is we're going to handpick the best optimized setups. And we're going to optimize our returns in those by hand selecting those perfect setups and get them in there to give us the best return on the shares, as well as the double dip with those high yield dividends coming in. Now, that's the power of the double dip. You take a great trade setup that already's like set to climb, you add in a potent high yield dividend return, and you get a formula that can max out even a tiny trading account. And I've started out with $100. I'm going to try to do this right along with you. And, I'm looking at just buying one and possibly two shares of a stock. We're not even talking options. We're not talking any complicated anything. We're talking about buying a share, holding it, getting the dividend, and then closing it when it gets to a target. We're going to book that gain on the stock climbing, and we're going to book that gain on the dividends paying out. Now, if you got more than $100 to invest, you can buy more shares. I mean, if you got $1,000 you want to put at this, multiply what I'm doing by 10. If you got $10,000, multiply by 100. I mean, if you got $500, multiply by 5. This setup potentially works for any size account that you can multiply 100 and get the number of shares. And we're not talking options. We're not talking anything else. We're just talking shares. I'm doing one share in the example. So you multiply my one share by however big you want to go. So the first trade is already in the members area waiting for you just as soon as you join. But even though these trades are mostly set it and forget it, you got the target, you got the stop, you got the entry, I want to keep you updated with urgent updates along the way if anything changes. So you'll get access into Discord, where I have a channel that I'll update you. And you'll also get a monthly market preview complete with expectations for the months ahead and key levels that I'm watching in the market and in our trades. I've included that high yield stock watch list with over 130 of the best high yield dividend stocks that I was able to find in the market. Just as soon as you join, you'll get access to that private Discord server where I've got a channel set up for double dip trades, and you can ask questions. There's already a bunch of members in there answering other people's questions. And even though I normally charge hundreds or even thousands of dollars for alert services that come with, trade alerts and signals and all the updates along the way, I'm not going to tell you that the system works on a $100 account and then charge you hundreds or thousands of dollars to get in. So today you can become one of my first double dip trade members for just $49. All you have to do is go to jeffreytrader.com/DDT or call 855-454-0816 if you need to talk to somebody. The fastest way, hit up jeffreytrader.com/DDT. I'll throw the link in the chat here. And any questions for anybody? Still about 100 people here, even after the pitch. So I'm sure that some of you have already joined in. These are going to be slow trades. They're not fast. They're not day trades. They're not swing trades. They're position trades. We expect to hold for several weeks, months, even. We're going to collect those dividends. And these are totally independent. Most of these have been excelling during, most of the ones that I've been getting in have been excelling during the corrections. They're high. They're just a different market segment. People tend to flock to these sort of trades when the market's uncertain because they're paying high yields. When I say high yields, we're talking about 5, 6, 7, 8% a year just on the dividends. And I'm watching out for the best setups. I'm not looking for ones that are in a downtrend. And we've already looked at a bunch of charts today. I'm looking for the ones that are set up to rise with a potentially good setup. Now, one of the ones that I was in before we launched this as an example was FIF, Foxtrot, in India Foxtrot. You can go take a look at that chart. It's been, it's had some ups and downs to it. We got in at a low, down around 13, I think. And our target right now is on 15 on that one. It's not an official track record trade. It was one of the examples before. So awesome to have you, Peter. And thanks, Bethany. So hopefully that answers your question. So jeffreytrader.com/Delta Tango DDT, or call 855-454-0816. Which ticker? FIF, Foxtrot, India Foxtrot? We can look at it real quick. This one's nearly done, so don't be jumping it right now. Yeah, see, I have a $15 exit, and it didn't fill there. I got in down here at 1340, I think it was. So the target was up here. Can pull back just a little bit, waiting for the next leg higher. So and when I say high yield dividend, look at these dividends down here. It pays 6 cents per share every month. So you get this bonus 6 cents every month you hold it. That's the kind of stuff I'm looking for. They give you regular payouts. And we're trying to get in down here where we have a nice pullback. We're set to make new targets. All right, Bethany, thanks for coming by. See you later. Hope you're feeling better. All right. Like I said, I've got a $100 account that I'm doing this with, and that's how, like, that's the track record right there. We're going to do this one share. So no options involved. This is just buy shares, even just one share. I mean, we're looking at, this is a $14 stock right here. I think one of the other ones, if I remember right, is that right? Let's see. Let me pop it up really quickly. Pop into double dip trades. Yeah, KYN. The track record got in at 894. A little bit up here, we pulled back. Still above the stop. So we're looking for a move up out of this. This was the move we were set up off of. Found some resistance at 9. We're looking for a move up to this 955. The dividend pays on this one is 17 cents. So you need like $8 to collect this 17-cent dividend every 3 months. So I'm buying one share. That's my max risk, one share in the $100 account. I have 130 symbols to spread out over. So I'm not putting too much risk on any one. And down here in TradingView, you can find out what the dividend yield is. It's 8.46% on this one right here. So yeah, FIF is not in the record. That was the demo trade we did when I was showing the team how it works. So FIF is on the list, in the watch list, but it is not in the track record. And the portfolio, the watch list, right now there are 2 trades in the track record. There's only 2. We're only going to shoot for 1 or 2 entries a month. So I'm not using any margin. It's a $100 account. You don't usually get much margin on a $100 account. So the watch list has 130 of these high dividend stocks that you can pop in a trading view and start looking through them and see which ones are the best. So even if you want to branch out way past the 1 or 2 trades a month, you're welcome to sort through the list and find the ones that you think are set to outperform for you. Where's the watch list? It's in the members area if you're a member. members.jeffreytrader.com. And if you didn't get a link to the members area, call into customer service and they'll hook you up. All right, we're going to wrap it up here tonight. If you're watching on YouTube and you're wondering how people are talking to me, we're in Zoom. So try to join us there next week. I don't have anybody watching the chat in YouTube. Make sure you like and subscribe. Come back next week for more content. I thank everybody for joining me. This is 45 minutes awesome tonight. So glad everybody. We'll see you again next week. Remember, Echo Trades Live is tomorrow at 1 for Echo Trades members. All right. See everybody later.